So welcome everybody, and welcome Brad Samson from ZEPP Health Investor Relations again. It's been a great Q2 in my views, actually. If we look at some of the metrics, ZEPP Health been doing quite all right, and it's, in my views, even kind of a turnaround on some of those KPIs that we would like to see. But the stock recently is also down again. Well, we have to say investors have been quite happy about the results, I would say, in terms of that. It was spiking up 20%, but now it's back to the levels before the call. So, Brad, can you explain some of this? What's currently happening and dragging down ZEPP Health?
I'll do my best. This is it's a tough stock that way. And look, if I could, this is my sixth public company running investor relations. If I could explain exactly what was happening at all points in time with any of these stocks over the years, I wouldn't have to work for a living anymore, because I'd be the perfect market seer, right? And so, look, you and I can talk about this and we can give it our best analysis. I think you have a couple things at play recently, the most important of which is just the continued sort of distrust in the market of what Chinese doing, what the China government is doing from a regulatory standpoint. I think there's a lot of knee-jerk reaction on that. I think that's all wrong. To the video that you did a couple of weeks ago about how investors are not understanding the real dynamics of the Chinese regulatory environment and what they're doing. I think people are misperceiving that. And look, it's kind of a market herd mentality. Something happens on the regulatory front, everybody goes, and screams in terror. And of course, if people like to short these stocks, they publish lots of stuff saying, oh my God, the sky is falling, right? So the people who are short encourage the panic, right? And so I think that's been the main driver. And again, I think that's completely wrong. I think it's wrong at a macro level, as you pointed out in your video. I also think it's especially wrong on a company like ours, because as a healthcare company, our data is so well protected. We meet the GDPR standards in Europe. We meet the standards in the US for healthcare protections. And so we're already towing the line that the Chinese government would like these companies to tow. I mean, frankly, we're not surprised. And I think, frankly, we support the fact if the China government is cracking down on people who are reckless with data, like Didi, for example, I think it makes sense. Who knows what these guys are doing with the data? So, but I think there's too much sort of U.S. market panic over this thing. And it becomes kind of a herd mentality that the traders trade it down on the day that there's any news on this, and people who are short encourage it. And I think that's part of what's going on lately. I think a secondary factor has been a lot of anticipation about Apple Watch 7. I think, I would like to finally get past that at some point. I don't understand why people react to that the way they seem to. I've handled that question going back to my Fitbit days. There is a certain sort of gut feel that sometimes people have that somehow Apple just wins everything by default because they're Apple. And, when you think that way about smartwatches, my question is, well, Apple hasn't managed to put all the other smartphone companies out of business globally. Why would you assume that they're going to do that with smartwatches? I think there's a tremendous market for different feature sets, different price points. Not everybody wants or can afford a Porsche. And I would use that analogy. And, there's plenty of room for Fords and other brands in the car market, in the phone market, and frankly, in the watch market. And we have a wonderfully diverse line of products and price points that I think appeal at a lot of different economies around the world, including ones that very few people in those economies can afford an Apple Watch. So those are I think, been the big drivers. I don't know of anything that people are reacting to from our second quarter results that would be negative, other than our guidance was not spectacular for Q3. But fundamentally, I think we sent all the right signals or had all the right information that our fundamentals are very sound. We believe that the self-branded products are growing very nicely. They continue to. And so, I can't always correct what the market gets wrong, but that's my cross to bear and carry up the hill, right?
Yeah, another thing which could be a macro factor, which I just noticed the other day, when looking at Teladoc, I don't know if you know about this stock. It's a US company merging with Livongo some time ago. And I noticed how it was like really trading very similar to ZEPP Health. And I wasn't aware of that, just comparing the two the other day. And maybe that was also my takeaway there. Investors are just not ready for prime time when it comes to the combination of hardware and digital and in the health area specifically. So maybe it was also kind of, I don't know, what's your take on that? But, an opening play in a way after the pandemic, and now not seeing like the real value of data and the combination of hardware and what wearables can do. I know Teladoc is certainly a different company and product, but trading very similarly right now. And so I'm wondering, like, what does it take for investors to kind of, get this aha moment in terms of that healthcare could be kind of disrupted by companies like Teladoc or ZEPP Health?
I think I'm not so sure that, how do I want to say this? I think, Marcel, that part of what may be going on there is during the pandemic, all the telehealth companies' stocks went crazy because it was like suddenly, doctors are doing everything online, and we had a real shift in how healthcare was delivered in this country, for example. And some of these stocks got way ahead of themselves. And I think there's been kind of a general sector pullback overall, mostly driven by some of these stocks that got really hot for a while. You've got Teladoc, and you're right with the Livongo merger. You've got American Well and a bunch of other, telehealth stocks. It's a hot sector, but I think there's been some pullback there. And so, you can see some overall healthcare market downward pressure, and that may be affecting us as well in general. I don't know that there's necessarily a real tie between how people think about telehealth and wearable data. But again, that's something that we're working on. That I view that as one of the critical factors that I need to build understanding and do some education in the market to help people really understand how valuable wearable data can be, so that they get a better appreciation for what the future state of, a real health ecosystem that's tied with consumers and providers and everything else, what that could really look like, and why wearables are a key part of that.
Mm-hmm. And do you have any events in mind which could kind of create those moments where like investors finally see also the value in data unlocked in terms of it's certainly not priced in the stock, if I would argue right now, because then certainly if you compare it to industry benchmarks out there, it would trade at wholly different levels, I would say. So what would be like some ignition moments in your point of view?
Well, actually, I'm glad you brought that up, because I am working to put together an event that we will host. I haven't picked the exact date because it depends on speaker availability, in probably late October, early November, before the earnings call, to specifically address the value of wearable data in healthcare. I am going to get several speakers. While ZEPP Health is going to host this, the real intent is to have a number of speakers who are independent of ZEPP Health to talk about their view of wearable data. So, for example, I'm going to have several of our research partners talk about their view of wearable data. I'm not asking them for an endorsement of our company. All I'm asking them to do is answer three questions. One, what is it you're researching? Two, why did you choose wearable data to use in your research project? And then three, any update that they want to give on the progress of their research, what they've found so far, and whatever update they're willing to give. And I'm trying to get the Stanford Sleep Center to be one of the research organizations who participates in this. We have another group of Peking University who's doing research. I'm also trying to get somebody from HIMSS, which is the Healthcare Information and Management Society. It's basically the organization you belong to if you're a healthcare IT person in the United States and in Europe. Trying to get somebody from there to speak. on their view as to how they're trying to make use of wearable data. I'm even trying to get somebody from the ONC, which is the Office of the National Coordinator of Healthcare Information Technology in the U.S. government, to see if they'd be willing to talk about that. They haven't said anything for a couple of years much about wearable data. So I'm trying to put this event together so that there's a nice independent discussion about state of and the value of wearable data in healthcare. So we're trying to put that together, and I'm hopeful that we'll get that all arranged for sometime later this fall. But that's part of the education effort, like you said, that helping people really understand what's really going on. So, for example, wearable data has certain features and aspects of it that make it unique in the healthcare universe. Traditionally, people have looked at data from claims when they've looked at trying to sift through data to gain value and insight into health treatments or diseases or predictions. When we started getting more electronic health record data, that has become useful. But what distinguishes wearables data from off your wrist is the longitude that you have of it. I mean, in some cases, you have years worth of data on people, and you have granularity that's not available for other kinds of data sets. So, you've got literally minute by minute, hour by hour data off of this thing. And that can give you a lot of interesting insights into any number of different health or disease factors. So to your point, this is a critical issue to help people understand what the future value may be. And so step one is to talk about just understanding the value of the data. Step two will be to talk in future quarterly calls and things like that about our vision for how we expect to try and build this health ecosystem. And not that I want to be long-winded here, but one final point on that is you saw that as part of this developer conference announcement that we made a month or so ago, that we are launching our own operating system on the watches to allow for third-party apps with a completely different architecture than anybody else has used, with the idea of making sure that the apps remain small in size and processor demand so that we retain battery life, which is, at the end of the day, I think, the killer app.
Yeah. Okay, coming back to the product specifics and also how they compare in a second. But first, from an investor's point of view, again, like the stock is now trading, I think, roughly 20% below at what it has IPO'd. So also, thinking, right, how well are the incentives still aligned to kind of be listed even? There is like, you seem to have a good cash cushion. The stock has now, the company has now turned profitable. And I'm wondering, like, what are your incentives to stay listed, and in terms of also kind of creating shareholder value in a point of view? I mean, I get one side, which is that investors are kind of not recognizing maybe the intrinsic value, one could argue, in a company and the stock, but also like, is the management determined to kind of playing the long game here? What are their personal incentives? Also your incentives, like, do you own the stock, for instance? I'm openly discussing here that I'm personally invested in ZEPP Health as well. So I'm just asking the questions, I think, I guess, which retail investors are possibly worrying about here at this point.
Right. And that's a great question. We're definitely in this for the long haul. I mean, Wang owns, I think, 30% of the shares of the company. So look, he feels the probably more pain than anybody else. I mean, this is probably, I'm going to just throw out a number here as a wild guess, but this I'm sure ZEPP makes up the vast majority of his personal wealth and the future of his family. And so he's got everything at stake on this. He's set up family trusts for his children with ZEPP stock in it. He's not selling shares. The decisions he's making are really in the long-term interests of the company. How do we build this for the future? I mean, people have asked about the Yitong investment, for example, and we spent some money on that. And we haven't been able to say a lot about it, but it's clearly something that's designed so that 2 or 3 or 5 years from now, everybody goes, wow, okay, now we're really seeing the payoff here for having invested in this. And again, the whole idea of Yitong was to give us a stronger presence in China on our own, independent of Xiaomi, and to be able to do some other things there with partners. You may not have seen the release, but it was a couple of weeks ago. Yitong actually partnered with another company to do things in like smart lighting and some things like that. And they're going to be developing some chips, and we are licensing our technology to Yitong for these things at a per unit licensing fee for these things. So we will start to generate some real revenue out of this. And that also gives us a platform that, being a Chinese company and a Chinese listed company, gives us some more flexibility in how we do things in China. And of course, I think the Chinese government will be happier with us because we're balancing, if you will, somewhat our, being listed in the U.S. and being a major shareholder of this other company. And so, Wang is, I don't think he could be any more all in on this and committed for the long term. And certainly when the stock is down, he feels the pain. He literally owns 30% of the outstanding shares. It's a huge number. Beyond the founders and some of the executives, most of the rest of the management team, like me, have either bought some shares and I've bought some shares on my own coming in, but also we are in a stock plan, which is an incentive stock plan that compared to most traditional US stock plans is a little longer term than most, in the sense that while it's a standard 4-year vesting schedule, there's a 2-year cliff, which is unusual compared to most American companies. Most American companies give you just sort of annual vesting schedules. This one is you don't get anything until you stay for at least 2 years.
Okay. So yeah, kind of a company founder already.
Well, so you're locked in. So, I've been here a little more than a year, but I don't, none of that stock becomes mine until I'm here for another year. Yeah. So it's making sure that you're committed to the company and that you don't just come in for a year, take some stock, and then kind of walk out and move on. And so it's just the way they design things. But, I think we have a good incentive structure. We are aligned. Certainly. Now, look, when you talk about alignment, are you aligned short term or long term? We're very much long term. We're trying to build this as a business. This is not I won't use any names, but there are other companies on Wall Street that I've seen founders sell half their company position in the first 6 months after the IPO. Those are people who are not in it for the right reasons. Yeah. Wang wants to build, he really believes in this mission to build a healthcare ecosystem that benefits all of us, and that we start tying things together. And so that's the mission we're on. And I think everybody is properly incentivized for that. So we feel the pain. It's I don't like seeing the stock go down. Believe me, Wang calls me when the stock goes down. And so that's
cool. Yeah, that's really great to know. And thanks for being transparent about it at this point. And maybe coming back to the product side. I sent out a tweet the other day after the Apple event regarding the battery life, and you mentioned that one also a second ago, because, well, that's just my personal choice. But when I watched the Apple event, and I haven't fully dug into it, but what I got from the event was kind of like, this is not convincing me personally to buy one of their watches, because I'm not the type of person, although they now claim like faster charging, who will put the watch on charging every other hour, in terms of just to be able to, for instance, monitor my sleep. So that was kind of the core value proposition to me always. Like when I bought my first, back then, Huami Amazfit, I was buying that one mainly because of the fact that I know, like, let's say 1 week I have nothing to think about, and it's just on my wrist and it sits there. I can do my workouts and then come back and charge it every other week, or even sometimes almost a month, right? And to be also transparent about that, I haven't tested like the newer ones, the ZEPP branded watches, but I want to get a feeling around like how impressed you have been from the Apple event, but also how you think like the ZEPP watches are comparing still for those kind of new announcements, and also looking into the future, like what can we expect? I think like on the developer day, we've heard about some new functionalities as well, but also in terms of the lineup, what you're seeing, like give us a feeling of like where do you compare there? Like what's the competitive edge here?
Thank you. Yeah, I've always struggled with the Apple Watch in the sense that the battery life is always an issue. Apple does a really good job of kind of covering this with a lot of marketing and sort of pretending like battery life is great. And everybody I know who's given up an Apple Watch said, I got tired of charging it. And I have believed for a long time, based on being in the wellness industry before I went to Fitbit, being at Fitbit, and now being here with ZEPP Health, that I agree with people, including Wang, who say battery life's the real killer app. And the problem is that when you have the kind of app infrastructure and architecture that Apple allows, the programs that people write for watches, just like smartphones, are real pigs. They hog a lot of battery life. They hog a lot of processing power. And so if you have a bunch of apps on your Apple Watch, it's like driving a gas guzzler car. You just watch the gas gauge go down as you drive. And that's why the OS that Wang created is architected completely differently than anything else anybody has done before. The app architecture is designed so that you can create really skinny apps, very light apps that will run on the watch, be functional. They may not be as whiz-bangy from a graphic standpoint as some of the ones on Apple, but that's why you do it this way, so that you preserve battery life. I mean, I occasionally, once a week, I'm kind of looking at my watch saying, gee, should I plug it in while I'm in the shower today? And I do that. But I've got 4 other devices I have to plug in every night, right? And I want to wear my watch overnight to sleep and to be able to, look at the time and things like that. And so, we architected the operating system very differently for that specific reason. So we're going down a very different path than Apple and some of the other companies have gone down. And I agree with that. I think it's really smart for us. And I also, again, I used the Porsche analogy with Apple. It's a Porsche among smartwatches. It really is. It's a very premium product. It's expensive, and it's beautiful. It does a lot of great stuff.
It's coming down closer now also to the ZEPP price level, isn't it?
Well, it's closer. I mean, it's still $400 in the US for the new 7. Our upper end watches, most of them, like, we haven't launched GT3. That's coming in about a month in October, but the GT series has generally run, when they're new versions, about $200. And, they come down, maybe they're 190 and, that sort of thing. And then, after a few months, they come down a little more, they're 180, whatever, and that sort of thing. But again, it's a matter of what feature sets you want. I would liken us to more being a Ford company kind of smartwatch. We make smartwatches. We make economy smartwatches, just like Ford makes economy cars. We make middle level models. We make some higher end models. Not everybody's in love with Apple. And you got to remember too, when you step back from this, and this is where I get really upset with the people who sort of assume that Apple just wins everything. Apple's operating system for their phones is only 30% market share globally. Here in the US, it's much higher. And so people just don't think about that because they just see Apple ubiquitously here. That's not the case globally. And I like to quote the statistic that 80% of the world's population exists on an average annual income that is 1/5 or less than US average income. So there's a lot of people in the world who can't afford a really high-end smartwatch. And we could kind of keep going down this rat hole, but I'll just conclude by saying that I think the fact that we have very robust feature sets, a variety of price points and different styles, we give people a lot of things to choose from. Not everybody wants to have a Porsche on their wrist.
Mm.
Some people still like mechanical watches, right?
Yeah.
There's that push pull with the mechanical watch industry because
Yeah, I
you're
mean,
not going
like
to hand your Apple Watch down to your children.
yeah, on the low end side, I would agree, and I think like the positioning is yeah, really yeah, great, a great asset for ZEPP in a way. But you know, what I'm worried about also investing, like for me, big a black box or question mark here is whether or not the self-branded products can be successful. Now you have like Apple coming down from the top, and I think that's what other investors also seeing at the same time. And still, we don't have like much yeah, insight whether or not, and that's also in an early stage, right? Those self-branded products can really grow into a big market share on the global side. On the other hand, like we will see on some of the company metrics that also like the average sales prices are increasing whenever the share of the self-branded products is higher in the overall mix. So that's great to see. But for me, it remains a really big question mark whether or not this is actually going to be successful and even a risk factor, because certainly we also see it in the sales and marketing metrics that money is needed in order to scale and to build a brand and so on. And so I'm kind of, yeah, can you share more, shed more lights on this? And also just in the last couple of earnings, I think it wasn't really entirely disclosed like how many self-branded are being sold in relation and such. So I think that might be one issue to tackle.
Yeah, I think there's some sensitivity on the company side about some of these metrics because some of these things move around quarter to quarter.
Yeah.
And one of the things that happened in Q2, the most recent quarter, is we got a, you know, for example, the percentage that self-branded products made up of the mix in the quarter went way down from Q1. So it was like 60% of our units in Q1 were self-branded. It was only 30-some% in Q2. And that had nothing to do with the fundamental demand for our self-branded products. It had everything to do with the fact that Xiaomi placed a big order for the next version of the Mi Band that dropped in Q2 instead of Q3 as it did last year, right? Mm-hmm. So you've got this quarter over quarter thing. And so, you know, Wang talked about it. It's in the press release. We are actually up 81% in self-branded products in Q2 year over year. I mean, that's a huge number. We have some very exciting things coming for later this year. Mm-hmm. I think our cadence is different this year than last year in terms of new product introductions because of the timing of when the new Huangshan 2S chip is available and the new operating system is available. So we're going to have, I think, more things this year kind of pushed into the Q4 timeframe than we did last year. I think that says we should have a very good Q4 because we'll have a lot of good things. You know, we talked about at the developers conference having blood pressure now on the wrist with pretty good accuracy. My mother-in-law is a nurse. And when we started looking at the data about the accuracy measurements, I showed her the numbers and said, all right, you're a nurse. You tell me if this is the plus or minus on taking somebody's blood pressure, how do you view this? And she said, these are actually really good numbers for accuracy. So we're excited to have those kinds of new features. I think the new OS will open up a world of new apps for people. And part of the idea of the app, the OS and the app structure or infrastructure, or I guess I should say architecture, is to let people who have limited programming skills actually make apps. Wang's view is that if you can actually develop a web page, you probably have most of the skills you need to actually write an app for our OS, which means people could do all kinds of things. I mean, I think this will give us a faster acceleration of having an app store and infrastructure and availability of apps because people are just going to create stuff, right? You know, my daughter wants an app for skipping rope. Fine, I'll make one for her, right? It took me an hour. That kind of thing. So we're really excited about that. But you know, if your feeling, Marcel, was that we didn't, you know, disclose enough about the self-branded, we'll try and amp that back up a little more next quarter. But there's always a little push and pull among the team here. I'm usually a voice for, I'd rather disclose more and then explain it than disclose less. That's my, again, I've been doing investor relations for 30 years. So my view is you're always better off giving more numbers and then explaining what they really mean, even if a lot of people misunderstand them. Because like I said, we had this thing with, if we talked about the percentage, for example, of Xiaomi versus self-branded, the flip from Q1 to Q2, somebody might go, oh my gosh, right? And freak out a little, like, oh my God, it dropped. What went wrong? And it's sort of the same kind of thing with ASP. ASP bounces around. And it's almost like, if you're going to track these kind of metrics, it's better to actually build a couple of different charts for yourself that track these either just over time, so you can kind of see the pattern, or to put together numbers like, trailing 12-month kind of numbers, or trailing 4 quarters, and look at, so is the average over 4 quarters changing dramatically? I know some investors at one point who showed me a chart that they had on Apple that showed trailing 12-month shipment data, and they were able to predict when things were going to go bad for iPad and for other devices that Apple had, because the trailing 12 numbers suddenly reversed from the upward trend that they'd been on. And so, I understand if that's a concern for you, Marcel, or for other people. Also, I would urge, since we're, recording a session here, if anybody ever has a question about this, please, my phone number is everywhere. Call me, text me. The number that's posted is my mobile number. I'm happy to text with anybody worldwide. I'm on StockTwits. I'm on a number of other platforms. I'm more than happy to try and answer questions or address concerns that people have, and we can go through some of the data. But as I look at the data, and I look at the data about device activations, the number of countries that we're activating in keeps going up and up and up, and the units and the dollars associated with many of the different brands or products that we have, I'm frankly personally made more comfortable by some of the distribution of some of our volume. That we do a lot with the BIP series, which is very, very inexpensive. Good. That means we've got that as a base. And then also what I considered sort of the mid-high GT series continues to be very, very popular as well. So we've got 2 major kind of legs, if you will, to the growth model of just some of these products. And I like having more diverse products. That was one of the things that always worried me at Fitbit. It's like, we have one high-end product, we have one middle-end product, and, maybe one sort of lower-end product, and that's it. And those didn't change for a year at a time. And we constantly update these things in our lineup with new features and more upgraded materials, better glass, whatever, as the prices come down.
Yeah. I mean, being a startup founder myself, I can relate to the core issue there, that some of these things may not be easy to disclose in the very beginning, in terms of that it can be very bumpy as a ride in a very first month. And I mean, that's what currently is happening with ZEPP Health, in terms of that is a startup in its own, with going global under a new brand. And so yeah, that's just where I wanted to have more visibility in terms of, acknowledging the risk there, also for the investors out there, that this certainly can cost money, or may not go as well as intended, particularly with the giants out there like Apple. We've been discussing that now. But another great keyword which you dropped is volume, but I'm referring back to the stock. I mean, that's one of the core issues of, not many shares of ZEPP Health are being traded, maybe less than $1 million sometimes of volume of being traded by investors, and that's really not a lot. Even other small stocks are trading much higher in terms of turnover. And so what are your actions you're taking to fix that or work on that? And why are institutions possibly staying away from the stock currently? What is your views on that?
I think there's a couple things that are worth discussing there. And I'll start with the last part of your question. I think the challenge is still that there's just a lack of understanding of the real dynamics of Chinese stocks. And, it's very tough. If you look at how a typical buy-side investment firm works, younger people who are relatively new to the investment game are the ones combing through the market to find ideas to take to the portfolio managers and the investment committees. And, one of the challenges is it takes a hell of a lot of intestinal fortitude to walk into the PM's office or walk in front of the investment committee, who's comprised of a bunch of grumpy old 70-year-old men, and say, hey, I think you should buy this Chinese stock. I mean, these guys look at him and go, what, are you stupid? Because all they're looking at is the headlines. That's all they understand. They haven't thought about what it is that, for example, again, going back to your video that you put out a couple of weeks ago, here's what investors are missing. So there's a tremendous education job that I have to undertake. And frankly, you're helping in that regard of addressing these issues, putting that out publicly for people. I have trouble even getting an audience with some of these people to try and even explain our story, because they just, there's a lot of this just sort of, we just don't want to touch a Chinese stock, right? Because the market's so volatile right now. Now, I not to editorialize too much at this point, but, the reality is that I've never really been a believer that the market's really all that efficient, right? There are undervalued stocks out there everywhere, and it's because people misunderstand the company. It's maybe out of favor, and they say, well, not enough people like it. And then there's always stocks that are overfavored as well, right? I mean, we've got a ton of IPOs going on in this country right now. Most of these companies have no business IPOing, yet everybody's chasing after these stocks like it's, we're going down the yellow brick road. It's like, and the problem is with a lot of these IPO stocks is what you find at the yellow brick road is a cliff, because these IPO stocks really didn't, by traditional measures, don't deserve to be IPOing. You've got $20 million companies with no revenue who are IPOing. And it's like, and then the stock is, $40, $50 on a dream, right? And so with a company like ZEPP, we're currently undervalued. My job is to help the market wake up, to educate the market, to overcome the objections that people have, real or perceived. And again, on the Chinese regulatory thing, I think this is more of a perceived problem than a real problem. As we've already discussed earlier, in this session, I think, your hypothesis is right on. I think we are a lot less at risk than other companies, but we rise and fall with sentiment on, Tencent, Alibaba, Didi, everybody else, because we're technically a Chinese company with ADRs on the stock exchange. I wish I had better control over the stock market to fix this like that, right? But the only thing I can do is keep, digging away with my shovel to help people understand the real fundamentals, what's going on in the industry. And, people who are smart, value or growth at a reasonable price investors should look at something like our stock and say, this is crazy. This is undervalued. I don't have a lot of downside here because this, you're not even trading that much above our cash value, right? It's nuts. But that's why markets are inefficient, because companies go through these phases sometimes. Honestly, I have spent a lot of my career working for companies like this, helping them get the market to better understand their story and appreciate them more. And there's lots of quality companies like that out there. I've worked for a bunch of them. And so that's the job that I'm trying to do. That's why we're hosting these events, like about the value of wearable data. So people kind of go, oh, okay. I was sort of thinking it's all about the EHR data because Cerner told me so. But it makes a lot of sense when you tell me that this other data has real value and how it's being used. That's why, I'm happy to appear with you, because you have a nice channel out to the world. That's why I put my number out there everywhere. So if you've got a question, people can call me. That's why I'm on StockTwits. That's why I'm on, Reddit. That's why I'm on, seeking alpha. So people can have access to somebody who can either address questions, perceptions, worries, whatever. So it's sorry for the long answer, but that's fundamentally my job, is to try and overcome these objections that people have, correct the misperceptions that people have. And there are always companies like this who are out of favor, undervalued at points in time, and it's a great entry point. You have so little downside, and you're waiting for the rest of the world to wake up and have in this country, V8 used to have a commercial that's sort of like I could have had a V8. Okay. That was their tagline thing for a while. And people slap their foreheads and they go, wait a minute, look at this company. This is crazy. This is undervalued. We can make real money here with a very low risk investment. And at some point, when people get either tired enough or understand enough about what's really going on with China, that weight will lift off our shoulders and all the other Chinese companies. And suddenly that will help get more people into the stock. Meanwhile, I have to just pound away and knock on doors and say, hey, you should look at this, and here's why. And, it's you're kind of being Johnny Appleseed, spreading, or, you're being a bit of an evangelist, spreading the news or the gospel of a good company. And so
that's exactly what this channel is all about. I mean, you mentioned it, education around this China opportunity in a way, which is an opportunity, but certainly also has its risks. So once again, this is not financial advice in terms of that you should or have to buy ZEPP Health, certainly, but as disclosed here publicly, again, we are both holders of the stock, and this series about interviewing you from time to time is also about fostering the knowledge around it and giving the information both on the positive as well as on the negative side, so that everyone can make a better informed decision. So that's kind of the purpose here, both on the macro side, but of course also some of the companies we're covering here. So I think we need to close it and wrap it up here and close it down, because we're already 1 hour into the session. But Brad, anything you want to mention with your last sentence here, and then also what will be the next thing that we can talk about?
I think the next thing we can talk about will be, we have the next major product launch is GT3. That's coming up in about a month. Mm-hmm. And I think we ought to talk probably right after that, when, we'll be doing a big kind of global launch event. I think it'll be in China, but we'll be trying to translate it for Western markets as well. I'm excited to see the new OS in action. I'm excited to see blood pressure on the wrist optically. Mm-hmm. We've got a lot of great stuff coming. I'm really excited. As you said, the challenge of investing and the challenge of being an investor relations guy is that most companies travel a bumpy road. It's never as smooth as investors would like it to be. There's always a number that's out of whack, or what happened over here? Why is ASP down, right? And that's where it's critical to kind of be able to look at it with the right perspective. Is one quarter's ASP really meaningful one way or another, or should it really be looked at more in context of over a timeline? So I think there's a lot of exciting things coming. I feel really good. Leon, the new CFO, who's been here since October, is driving what I'd consider more kind of bigger company financial discipline at the company.
And I also have to say, I've been on a conference call, so that was really a good call in my point of view. The way that the team answered the questions. And then later on, he was the guy also going on TV, right? So that's cool.
Yes.
As well. Yeah.
Well, Leon came from Philips.
Yeah.
And he's used to Philips' level of rigor of how you do things, right? And so he's driving a level of, financial reporting discipline, operational discipline that, frankly, I think is good for our company to have more of. I mean, this is when you grow as quickly as we have, from kind of a startup to, we're almost $1 billion in revenue. You need some more discipline, some more structure, if you will.
Now you even got a CTO.
Yeah, well, and Leon's a really smart guy, and I was excited when I saw his background that coming from Philips. So
Mm.
I
No, I
think we have
mean,
a lot of
chief technology officer, CTO.
well, and he's proven because he's proven
Yeah.
himself here at the company,
Mm.
and so we've got a great team. I think we have a lot of great assets. I think the strategic plans we have, we're placing some bets in some new areas with the imaging technology. There's a lot of things that we're starting to do that I think will be very helpful. And again, we're playing a long game. This isn't like we would just want to drive it through December and then we're out. It's what is this company going to look like in future years? Marcel, you understand the Chinese culture better than I do, but my perception is that culturally, the Chinese, in my experience, much like people in India, in terms of Indian companies, build for the long term. Here in Arizona, for example, Indian tribes that are in Arizona, when they make investments in things, they're thinking in terms of generational investments. How will my grandchildren benefit from building this on our land? And so I think we're of that same mindset.
I just saw something on Reddit, I think, or coming from Twitter, regarding like someone asking like, how come China has no culture in comparison to the US? It's so funny if you look at that was something like a meme or almost like from Bad China Takes, but like a Chinese person with 5,000 years in history would just look at this and like shake their heads like yeah, we do. But I mean, like, yeah, to the point, I would say like, yes, the Chinese are very much long-term oriented, but of course it's like also from the investment side, and also particularly the retail investors which have now witnessed the 2020 run up are very, very short oriented in some ways. But
and I understand that, and we can't run the company for that. We have to run the company for the long term. I think as Americans we tend to be very sort of self-centered. My wife and I went to Italy for the first time a number of years ago, and we had a guide in Rome who said, he was showing us around, and a nice guy. And he said, look, you guys in America, you have stuff that's 200 years old and you think it's old. Stuff in Italy that's 200 years old, that's still new here. He said, we stick a shovel in the ground and we hit something that's, 1,000 years old. And then we got to figure out what to do with it when we dig it, when we find it. So he said, you guys have to adjust your perspective. And I think that's the naive perspective that we get from a lot of Americans. It's very Apple centric. It's Apple controls the world. It's, we're the hot shots on the street. And it's like, we need a little different perspective. So I appreciate the time today. Thank you very much. I always enjoy doing this. I think you ask really good, challenging questions. And again, I still think your recent post and video about properly understanding the Chinese regulatory environment is a wonderful, thoughtful point of view that I think everybody should really be looking at.
Cool. Yeah, thanks a lot, Brett, for taking the time again, and it was great talking to you. And yeah, thanks for being so honest and transparent here. I think that's really valuable for the viewers. And let's see, we can even go into some historic or macro topics here. So that's awesome to see. Yeah, have a good time, and thanks again.